If you have money sitting in a regular savings account right now, your bank is paying you almost nothing and quietly keeping the rest for itself. By the end of this video, you'll know exactly what a high-yield savings account is, how much more you could actually be earning, and where to open one today. Let's start with what your bank is actually doing with your money. When you deposit money into a savings account, the bank doesn't just hold it. It lends it out to other people, mortgages, car loans, business loans, and charges them interest. The bank is making money off your money. The question is, how much of that are they sharing with you? At most big traditional banks, Chase, Bank of America, Wells Fargo, the answer is almost nothing. The national average savings account interest rate right now is around 0.5%. On $5,000, that's $25 a year. That's one Chipotle burrito. Meanwhile, a high-yield savings account at an online bank is paying somewhere between 4% and 5% APY right now. On that same $5,000, that's $200 to $250 a year for doing absolutely nothing different. That gap is your bank's profit margin, and most people have no idea it exists. So what actually is a high-yield savings account? It's a savings account. Same concept, same FDIC insurance, same easy access to your money, except it pays significantly more interest. The reason online banks can offer higher rates is simple. They don't have physical branches. No buildings, no tellers, no ATM networks to maintain. Those savings get passed on to you as a higher interest rate. FDIC insured means your money is protected up to $250,000 per account if the bank ever fails. So you're not taking on any extra risk. It's not investing. Your balance doesn't go down. You're just parking your money somewhere that actually pays you for it. Where should you actually open one? A few options that consistently rank at the top for interest rates and no fees. Marcus by Goldman Sachs, SoFi, Ally Bank, and Discover Online Savings are all solid choices. Rates change, so it's worth checking a current comparison. But any of these will put you miles ahead of a traditional big bank. What to look for? A competitive APY, no monthly fees, no minimum balance requirements, and FDIC insurance. Most reputable online banks check all 4 boxes. The transfer process is straightforward. You link your existing bank account, verify a couple of small deposits, and you're set up within a few days. Now, a HYSA is not an investment. It's important to understand the difference. The interest rate on a high-yield savings account can change. When the Federal Reserve adjusts interest rates, HYSA rates move with them. Right now, rates are high, which is great, but they won't always be this high. That's why a HYSA is best used for money you need to keep safe and accessible. Your emergency fund, money you're saving for something in the next 1 to 3 years, or cash you're holding while you figure out your next financial move. It is not where you put money you're investing for the long term. For that, you want a brokerage account or a Roth IRA, which we've covered in other videos. A HYSA and an investment account serve completely different purposes. You need both. Here's the move right now. If you don't have an emergency fund yet, open a HYSA and use it as your emergency fund home base. 3 to 6 months of expenses, sitting there, earning 4% or 5% while it waits. That's the best possible use of this account. If you already have an emergency fund sitting in a regular savings account, move it today. It takes 10 minutes, and you'll thank yourself every time you check the balance. If you have short-term savings goals, a trip, a car, a down payment, a HYSA is where that money lives. You're not investing it because you'll need it soon, but you're not letting it sit idle either. Your money should work for you, even when it's just sitting there. A high-yield savings account is one of the easiest wins in personal finance, and it's wild how many people are still leaving it on the table. Open one, move your emergency fund into it, and let it sit. That's it. Next up, we're getting into the question a lot of you have been asking. Should you pay off your student loans first or start investing? The math behind the answer might surprise you. Subscribe so you don't miss it.